Hey, we're live. Deribit Live, November 30th. It's the last one of November before we get into Christmas. Everybody knows it's going to be Christmas because every store is decorated. Can you guys hear me okay? Everyone hear me okay? Just put a...
hang on.
Oh, you can't hear me?
Yeah, I can hear you.
You can hear me. There's Andrea. Andrea, привет. Как дела? All right, what do we got going on here?
This really is a international friendship channel, isn't it?
It is. It's practically, if we were a retail store, we'd be Benetton. You know, Benetton, They're always like all international and stuff. Anyways.
Your stream of differences is just overwhelming today.
All right. Andre says the sound is good. G. Andrea, thank you. We got a lot of new people on today. That's nice to see. So some new faces. So yeah. Let's do something good today, Richard, for these new people.
Now you've got me worried.
Yeah. I didn't want to put too much pressure on you, but okay. We'll let a few more people come into the room as we are. Preparing here. I think I've got everything ready. I even did a little poll today, and I think it's a very relevant poll right now. And you'll see, actually, what I'll do is I'll put that poll up right after I show my charts, and we'll talk. So we've got some interesting topics today. Okay, so it's 3 minutes after, so let's just get going, and some people might roll in after the fact. But as always, if you don't have a Deribit account, check in the chat box and you'll see a little link there. Do us a solid, save yourself 10%, and share the love. Share the love. All right, so what's the agenda for today? I got the slides over here. Well, as always, we do a bit of market analysis. We take a look at some charts. We often talk about current trade strategies we got going on. Not always. Just sort of depends on what the market's doing. And the topic today is why crypto implied volatility follows spot prices. And I think that a lot of you will find this very interesting, and it's this kind of anomaly that's in the crypto space. But before I get into that, I want to have a little special plug here just for us. Everybody knows what's roguetrader.academy is what Richard and I have. That's very cool. But I just want to say something. For silver members and higher, we've had this little program for a while where we have an interactive live trade alerts Telegram channel. Okay, that's cool. We've got a weekly call and Ask Me Anything call. We're on with our members. That's cool in the recordings. Access to all our courses. But we're starting something brand new, and this is a lot of fun for us. We're doing these daily video updates, and we're doing live streaming. And what this is we've got a fund, and we set the fund up with 5,000 USDC because that's sort of the average price of a retail trader. And we're trading this like we trade big funds. Okay. Well, obviously, we're going to have to use different strategies because it's only 5K, but we're going to try and show people that you can get a good return even from smaller retail accounts. But the funny thing is we decided we're going to live stream on Patreon. Now, we should be live within the next couple of days. If you run over there right now, it won't quite be ready, but very, very soon it will be. But we're also doing OnlyFans. Now, I know OnlyFans has some connotations to it, and I'm not going to get into that, but we thought, you know what, we might be the first people on there to do something like this, and we are. And you know, it's going to be a family-friendly show. We're not going to be stripping naked or anything crazy like that, but we're going to just have some fun and do our live stream. And you can choose your poison. Maybe you already have an OnlyFans account. I don't know. There's no judging over here. You just jump over and join us. It'll be dirt cheap for everyone to join us. And Rich and I usually chat for probably 10 to 30 minutes as we go through the markets. We go through all the metrics. We use all our tools. We execute trades all on the call, so you'll kind of have full transparency to everything. Okay, so what are we doing now? Oh, I think our audience can't be surprised, right? We are the rogue traders after all, and what could be more rogue than being over 50 and on OnlyFans? You know, and because you could be an OnlyFans star, Richard, you could now be the coolest guy on your street.
That would be a first.
All right, let me pop over, and I'm going to share my screen, and we're going to look at.
Giandrea is already into it. He's going to sign up.
That'd be awesome. All right, you can see my charts here. This is the Bitcoin. This is the 4-hour chart. Now, I put this little date on here because I was chatting with Richard earlier this week, and I said, look, we got this ascending triangle here, which is a bullish pattern, and it's pretty much held true the remainder of this week. Now, we had a little wick up through 38 a couple of times, but it couldn't hold up above. Everybody recognizes 38,000 as a big area of resistance. And why it's a bullish pattern, and I'm not going to get too technical here, is it hits it and it comes down, but every time it comes down, it makes a higher low. Okay, and eventually it's going to get squeezed and it's going to blow off. Most likely to the upside. Of course, never a guarantee with any technical analysis, and that's sort of what everybody's expecting, anyways. Let's face it, most of the world is bullish on Bitcoin right now because of all the events coming up in the spring of next year. So that's where we got what's going on. Now, I could come over here and I could say, look, you know what? I'm going to draw a bit of a line down here, and this would be a channel. So if it does get rejected off, I'd expect it to stay in this channel. We'll see. We'll see what December brings. Taking a quick look at ETH. Well, it's a little bit less exciting, and we are definitely right smack in the middle of a channel which is kind of just above 2,100. And down to about 1,900. So I'd expect it to stay range bound. It's a good time maybe to sell iron condors, that type of thing. But I would be a little bit cautious. If Bitcoin goes, Ethereum is probably going to go with it to some degree. And we are getting into a lower period of volatility than what we've been seeing over the past few weeks. So I'm going to be pretty cautious about selling risk. I'm going to take it a little bit easy. There's nothing wrong with having a little bit on, having some data come in every day. We do it. And then we're just prepared to manage any side that gets tested. But we're not going to have heavy risk on, because when that IV spikes, oh boy, it can be painful if you've got too much risk on. So it's time to back off, and maybe I'm not. Who knows? Will vol keep dropping lower? Richard seems to think it will, and maybe when he jumps on, he'll show his chart and kind of give his theory there. But it might be time to start thinking about being long vol. And of course, in our daily trading videos, live stream, we talk a lot about that and how we use different expiries and strikes to protect ourselves. Okay, so now that that's done, let me stop sharing my screen here if I can get my mouse to work. And I'm going to go over to my poll question. And the poll question is, do you think that we'll break and hold above that 38,000 barrier, that level of resistance in Bitcoin? I should have put Bitcoin in there. I did, but I had to retype it. I'm talking about Bitcoin. So number one is yes. There's a poll. Sorry. I didn't publish. Yes, in December, for sure it's going. Maybe that's what you think. Option number two is yeah, but you know what? Not until the new year, sometime in the new year, who knows when. Or number three, no. You are totally going against the crowd. You're swimming upstream. You think it's going down. Let me know what you think. And then afterwards, at the end of the call, we can talk a little bit about some basic strategies, to take advantage of that. All right, that's what I got right now. So let's pop over to Richard. Richard, is there anything you want to talk about or share before we get into the topic?
What do you mean about sort of personal problems or
no, actually, before we get into that,
alcoholism or...
Yeah, your personal problem. So Richard was very concerned about his haircut today. He was like, maybe I should ask if I should get a new haircut. But I just want to say that your hair is starting to emulate that picture behind you. The way people start to look like their pets? I think that's what's happening here. I think really what's...
That picture actually has an attachment to fame. That was painted by the guy who used to cut Anthony Bourdain's hair.
Anthony Bourdain.
Yeah, and that painter stayed in my house, and as a thank you, he sent me that painting.
Well, that's very nice. I like it.
And Anthony Bourdain was a bit of a hero of mine. So
very interesting. Maybe if you want to talk about devol, or if you've got any sort of thoughts on basic, generalities in the market, we could do that. Then we'll jump into our topic.
Yeah. So shall I call up the DeFi? What's it called? Immersive finance thing.
Yeah. And just so everyone knows, we use immersive finance tools to evaluate the markets.
I need to change that login.
Are you okay? Oh, yeah.
Yeah, it's okay. So right. So if I look at the 1 month chart, That's been kind of Bitcoin for the past month.
And just to be clear, the blue is spot, right?
It's a spot. This is Bitcoin spot. So it's kind of, we're seeing like a relentless march up. It's gone up from 34,000 to 37,000. It's gone up 10% in a month. So that's 0.3% per day, or 2.5% a week, something like that. Which, for my style of trading, this is absolutely the sweet spot. This because this makes me money in both spot and premium. I love this kind of market. But that's irrelevant. And if you look at then the 1 month volatility at the money over that time period, it's gone the opposite way. Now, remember, we keep saying that spot follows or volatility follows spot, and it's true in the very, very short term. If you look at this spot and volatility lines on a 1 day or even 2 day or 3 day basis, you find an incredibly high level of correlation. You see that this peak on the left here in spot correlates with this peak in vol, and this peak in spot, this peak in vol, and spot up here, vol peak, messing about here, and then market comes down, vol comes down, and you get the idea, right? So it doesn't hold for long periods of time, but it holds for the short term. So what we're seeing is that the market's kind of relentlessly pushing up. People were very afraid of selling upside vol at the beginning. And as the time has gone by, people have become, shall we say, more complacent. They're more happy to sell calls, maybe even more happy to sell strangles. And as a result, with more vol sellers in the market, vols start coming down. People who are long vol can't sustain being long vol for too long because they're decaying too fast. So they won't pay as much for options and so on. So the vol starts to come the other way. Now I was going to talk about why we get this correlation between spot moves and vol moves. And the long and short of it is that in most financial markets, I think it's fair to say that most retail players are vol sellers. So they like to put on their iron condors or their strangles or whatever, or recently their 0 DTE S&P 500 straddles, and collect premium and hope not to do anything. It's kind of like the sit and pray method of writing options. And of course, therefore, market makers are long vol because they've been buying these options from these DMFs or customers, value customers, as we like to call them. And the market makers, of course, if they're long vol, whenever the markets go up, they have to sell spot, and whenever the market comes down, they have to buy spot, and that keeps them that hedges the gamma and earns enough, hopefully, premium to pay for the any decay that they're paying over and above the spreads they've earned. So that's the normal synopsis of the market, and then therefore markets tend to be mostly stable. As I understand it, Bitcoin is the opposite. Most retail and speculative, most buy-side customers are buyers of options, and particularly buyers of calls. So everyone's optimistic about Bitcoin. This has been I've been through the backtest data for the past 4 years. It's always been the case, right? Even in the bear markets. And as a result, the market makers tend to be short gamma or short vol, which means that they still have to do the dynamic hedging, but now they have to buy the market as it goes up, and they have to sell the market as it goes down. Otherwise, their delta gets bigger and bigger, and they start running into margin problems and all kinds of danger. So that makes the markets dynamically unstable. And since all of those those option buyers are on the call side because they all think Bitcoin's going to the moon or hope or whatever, then what's actually happening? It's not even magic. It's just completely systemic. That the market makers who are long, who are short calls, have to systematically buy spot or futures as the market rises, and so they actually cause the market to rise further. Because we're now at a stage where, courtesy of Deribit, say almost single-handedly, the options market is in Bitcoin is now almost bigger than the spot market in Bitcoin, which is normal for any market, right? And we'll become more normal. We'll get to a stage where we're like 1,000x notional done in options versus 1x done in Bitcoin eventually. That's the same for any financial markets. And if that carries on, then with the current paradigm, then Bitcoin is going to get volatile as hell because you've got 1,000 times the number of Bitcoins being bought through options, and the market makers having to hedge those 1,000 times. Then we'll see massive vol. We'll see vol swings that would make your eyes water, and huge price swings. But of course, what will then happen is that as more vol appears in the market, and then people start realizing that vol has been reversing, then vol sellers like me will come in and start selling that vol, and therefore buying or selling some of that vol to the market makers who are now buying vol, and then eventually an equilibrium is reached where Bitcoin markets become much more like standard FX or stock markets or commodity markets, where there's a balance of buyers and sellers, and therefore the option that the market makers are not having to take a position, they're just dealing in flow, which is where they'd much rather be, right? If they make far more money doing that. So that, in a nutshell, is a simple explanation of why when spot goes up, vol goes up,
and vice versa. And of course, we traded TradFi markets for 20 years before Bitcoin or crypto options came along, and we still do. But the 90% of the time, or maybe even more, if you're trading an equity or something or a stock, when the price goes up, vol drops. And the reason is people are kind of happy, like, oh yeah, okay, that's cool, it's going up, nice. But they get a bit panicky when things come down, and vol tends to spike.
Well, if you're trading, I don't know, Tesla stock, and you're bullish on Tesla, you're going to buy your stock or your futures, and go and borrow to do it properly. But you're going to be buying puts on the way up, right? So you're constantly buying downside gamma, and so the market makers are all selling downside gamma. So when the bull run breaks, everyone's going to hit their stops. Everyone's going to close out their leveraged longs, and then the market's going to drop because of that. And now the market makers have to hedge that downside put risk, and so down we go. Yeah.
I don't appreciate you giving away a strategy where we're buying puts on the way up, because can't give away too many secrets here.
No, it's true. I mean, look, people who trade spot and futures, who are people I have no understanding of whatsoever. I don't know why you'd ever do that, but they put in stop losses if they've got any brains at all, right? I don't trade spot or futures because I'm too stupid. I have no idea how to read markets, so I just buy puts. It's easier.
All right. Actually, one interesting thing to note is we often have people approach us from the U.S. and they're not able to open a deribit account because the U.S. people are prohibited from that. And there's other things they can do. There's other platforms they can trade, but there's not a lot of choice for those Americans. And there's a few other restricted countries. But, we often have conversations with these people who are like, look, even if you're just, maybe you got an account and you're trading the S&P or trading something, or the FTSE, whatever you happen to be doing, or you're in Asia, if you're following this and you learn to trade crypto options, you can trade anything, because crypto options. So let's say you're trading the S&P, maybe once every 5 years or 10 years, you'll get some event that happens every 6 months or a year in crypto. Crypto gives you the full package, super condensed into this roller coaster ride. And the interesting thing is you get to see all these metrics changing in real. It's like a textbook. You get to see everything in that textbook over a year in crypto, and that's pretty cool. If you and kudos to everyone who trades crypto options and are successful, because it's I'm going to say it's not so easy. I think if you become good at the crypto options, you can trade any market.
Oh, we're going to put this on our website, aren't we? Which is, why do we teach people how to trade Bitcoin options? Even Americans who can't get access to the European markets like Deribit, because when you trade Bitcoin options, you get to see, if you trade Bitcoin options for 3 months, you'll pretty much see every scenario you'll ever see in any TradFi market ever in that 3-month compressed period. So it's like a permanent training ground for hardcore options trading. It's really good exercise, a really good grounding.
It's like a cage match, really.
Yes.
Yeah. I just scrolling through the chat. I wasn't able, for some reason, I wasn't able to move it for a while. But G. Andrea had a funny comment. You might have seen it. We're talking about OnlyFans. She said, if you're on OnlyFans, you can only do naked options. That's pretty clever. That's a joke I would make. So I'm
yeah, that is kind of you. Yeah, you found a soulmate.
Yeah.
Well, I mean, but even these strippers on OnlyFans have a bit of cover, don't they?
I don't know anything about it, Richard. So let's not.
So I'm told. I have no idea. I guess we'll meet them at the OnlyFans Stars party. We'll be invited to.
You think we'll get an invite? Do they have like some big?
They must have these like OnlyFans awards of who makes the most money from vulnerable young men, and why should we be any different?
Well, why should we? Yeah. I don't want to be left out. All right. So, do you want to talk about the devol and kind of your current philosophy on what you think it might be doing in the next short term, or do we just want to move on to questions?
Oh, sorry, that was the question, wasn't it? Yeah,
it was, but that's okay.
I answered a completely wrong question. Yeah, I do that. I ignore you most of the time.
Yeah. Well, you actually answered the topic of today.
Oh, yeah, okay. I knew there was something for some reason for rambling on. So, what was the question? What's my prediction for Bitcoin? I'm in two minds. I think it's 50-50. Well, I think it's 49-49, and there's 2% chance of nothing happening at all. 49%, we break through 38 in midway through December, and we power up to 41-42. In which case, we're going to get a vol spike up to about 60 vol, and into which I will be selling like the proverbial vol seller up a drain pipe of.
Yeah, leave the jokes to me. But I guess what it was,
and 49% says actually we bounce off this. Everybody in the US loses heart for Christmas and thinks screw it, we'll come back in January and try again.
All right, but
in which case, vol drops down to 45 again.
Yeah, and I think the other day you were just we were looking at the devol chart on Deribit, and it is in a downtrend from 2 weeks ago or so, and you kind of felt it might slip down a bit more. So we were kind of being cautious. We wanted to start picking up, going long vol at some point, but you were being a bit cautious, and you thought we might get down to the low 40s around that area completely before we spike up again.
Personally, at the moment, I'm kind of a reluctant buyer and a reluctant seller of vol, so I'm actually just winding down I'm net short gamma, but I have a lot of protection in the book, and if there is a move, then I want to catch it early. So I'm very prepared to accept much lower yields at the moment than because vol. And if we were at 60 vol at the money, I'd be selling it. Yeah. And I probably could get 60 vol out in March or something stupid like that, but
not worth. Yeah, I completely agree. I mean, you just never know what's going to happen, but you want to sort of play the law of averages when you're selling risk, and you want to make sure you're not going to be too far into water.
And I really want to see one of these SEC funds approved before I gauge how much of a reaction there's going to be on the subsequent approvals. Yeah, because. It'd be a real shame to position it for it's going to be 80 vol and then suddenly find it's 130 vol and
Yeah. And in fact, just this morning I saw on Deribit, like the little news feed they got, they're talking about how the approval and how people are going to be out there just pushing to funnel billions and trillions into the crypto markets. And everybody's just been talking about that for a long time. I didn't read the article, but
I mean, we hear this kind of talk all the time. Whenever there's back in the 80s, shows you how old I am. When London was opening up to US firms coming into, it was called the Big Bang, right? And every broker was talking about the wall of money that was going to come in and drive up markets. And money came in and markets did go up, but that was more to do with Thatcher's policies and business-friendly environment than it was with for a wall of money. Right?
Yeah, I think that we're both prepared, and all the accounts that we managed for less than a stellar big bang. We're still expecting things to go up, and we think the crowd might be right, but we're prepared that it might fizzle and die, or at least have periods of fizzle.
And on that point, because I believe that the crowd might be right, that's a surefire concern you should have, because if ever I have a strong view about the market going up, it's probably going to go down because I'm often wrong. I'm wrong more than I'm right. So if you do whatever I say the opposite, you'll make money. It's in terms of spot trading, and I've got no social intelligence at all when it comes to it. But so we are also protecting the downside because why not?
And puts are cheap. So I see Tom was asking about our returns. Well, we've been running the fund for 29 days or 30 days now, and we're up about
7.5%.
So something like that. So
just running very, very low risk in that little $5,000 fund with not letting it earn more than $50 a day. And when as vols come down, we're bringing the earnings down to less than that. I mean, $50 a day is still 1% a day, right? So it's if you compound 1% a day, it comes to something stupendously ridiculous like 37x a year, which is clearly massively overtrading. But actually, we put sufficient protection in the book that
margins under control.
There's some comfort there,
And look, we can look at our intrinsic value there, which we do, and we say, look, over the next week or two, we've got $300 of intrinsic value or something. Whenever you see that intrinsic value, you're never going to realize all of it. There's going to be things. There's going to be sudden moves. It's crypto, and but as long as you have the protection in place, so they minimize the damage, and then you carry on, away you go. I see. Mike, inverse Kramer. Exactly. We should do an inverse Richard fund. That's what we should do. Yeah. So we got a few questions here. We're almost at the end of our time. So, Vladimir, regular question from me. What should we do with our futures positions when you start hedging delta versus your options position after expiry date? Because your option will expires, but futures position is still there. Great question.
It's super simple. If you're hedging with perpetuals, in the last week, you need to be converting those perpetuals into equal but opposite delta to your options position that's going to be expiring in that week. Because otherwise, you get a massive flip in your delta, and you're going to be on margin call before you know it. Particularly if you've been hedging hard, you might be like long 5 bitcoins of futures versus short 5 bitcoins of options, and suddenly the options expire, and within half an hour you're suddenly on 5 bitcoins the wrong side of the market. So convert your perpetuals to futures so that your futures delta is equal to and opposite to your options delta for the next expiry, and do that before it gets expensive. Because if the market knows you're trying to do that, it'll keep the futures out of reach.
Yeah, have those expire at the same time so you don't get a surprise email. We've liquidated you. Okay, Sylvanus, what is a Delta One product and strategy? Can crypto options do Delta One strategies?
So Delta One simply means that essentially you're trading either a future or the underlying. And yes, you can do that with options because you can make a synthetic future with options. If you buy a call and sell a put at the same strike and the same expiry, you've effectively gone long a future. And if you buy a put and sell a call at the same strike and expiry, you've effectively gone short a future. So the Delta One just means that the overall position has 100% delta.
Question from and Sylvanus also commented that Richard equals Jim Cramer. So that could be a comment. It could be not a comment. It just depends on your perspective. Maybe a little bit of both.
I wish I was A as evil and B as clever as him, because he, allegedly makes money out of influencing media to pimp stocks that he wants his funds to sell, and vice versa. I wish I was that powerful.
Yeah. I think I read something about Jim. I think actually his wife was sort of the brains behind the operation, got him to where he is. But not surprised. Most successful men have.
The female is always more deadly than the male. Yeah.
Question from Dennis. I do have deep in the money long calls from a month or two ago expiring in December, and March, which I'm still using and selling short dated calls against. Great.
Nice.
How would you proceed with those deep in the money calls? Take profits?
Oh, this is bordering on investment advice. So I won't do that. And you wouldn't want to take advice from me anyway, because I'm always wrong on any directional play. If you could end this right now, right? So let's say you're long the 28,000 call, say, or the 24,000, whatever, and you no longer want the optionality on the downside. You're like afraid of the market might go back down below 28,000. Well, then it's very simple. You just sell the 28,000 put. you've now turned your long call into a synthetic future, and then you just sell futures to match it, and then the position's gone. So there's no need to unwind it if you don't want to, or if you want the cash, you can unwind it and take the cash. I think the textbooks would tell you that you should never sell a in the money option, because the optionality is worth more than the optionality has more value. But again, not investment advice, because the textbooks also say you should always split eights on a blackjack table. And every time I split bloody eights, I get hammered. So
the old expression, you never go broke taking a profit, and that's why I love scaling up. So sometimes I might just say, you know what, I don't know what the heck to do, so I'm going to do a little bit of both. I'll take some profit and I'll let some ride. There's nothing wrong with that either.
And conversely, my philosophy is, if I don't know what to do nothing, because whatever you do is going to be wrong.
Yeah, unless you're standing in the middle of the street and traffic is coming, do something.
Yeah, there is. Well, do you run? Do you stop? I mean, if there's a guy's already swerved to miss you, he might swerve into you.
Jeez, this is deep philosophical.
This is options trading, dude. Whatever you do is going to be wrong, particularly if it's
no. Well, you do have your famous Richard quote. Trading is a series of regrets. Because even when you're right, you think, oh man, I should have held on longer. Yeah. There's always a way you can look back and critique yourself, right? So, all good fun. Hey, we're at the end of our time. I think that's it for the questions. And again, thank you everyone for.
What's the poll? The results on the poll.
Oh, geez, yeah. Oh, sorry. Yeah. Let me end it right now.
Yeah.
As we kind of expected.
No one reckons we're going down. I'm definitely going to buy puts. That means everyone's leveraged along. And if it does move down, the market's going to get hosed.
And this is why we're buying puts. They're so cheap right now. And, a lot of times what we do is we just take a little bit of let's say we're making X amount in theta per day. Well, you got a tiny account that's $10 in theta. You got a bigger account, you're making $1,000 in theta, whatever. Yeah. We take a little percentage.
That's it. I tell you what, at 1 month, there is still 10% positive risk reversal in the skew. And that makes risk reversals cheap in my view. So I think sell riskies, buy futures. Can't go wrong.
Yeah. Selling a risk, which is buying the put and selling the call and buying the future. So I guess that's in fact what we covered last week. We talked about, or the week before, I can't remember now. We talked about risk reversals because there's a lot of different ways they can be used. But
there's something else I wanted to say. Sorry, we're overrunning. I realised that. I wanted to say that. I was going to do a quick screen share. This might be of interest. It might not. I'm not yet fully sure whether I believe it's a signal. But this strategy, the future spreads. A couple of weeks ago, I bought this. I sold this spread. Sorry, so I sold the 29th of December futures, and I bought an equal number of the perps. And I did that at about $345. And this is starting to decay, because if you look at the futures, the implied interest rate of BTC on the 29th of December is starting to ease off. It was up to about 11. And at one point that spread was $400. But it's starting to look like there's less aggressive buying of the future. And I don't know whether that's a signal. I'm just wondering whether that's early. I mean, it's too early to tell, but it feels like maybe a little bit of signal of a little bit of fatigue creeping in, or a bit of caution creeping in.
Could be. And I think there's a chance we might go sideways for a good chunk of December, and then pick up the enthusiasm at the end of December or into the new year. Who knows? I mean, everyone in this poll thinks we're going up in December. So if you think it's going up, well, I hope you're buying calls, or you're at least buying debit spreads. You want to be positioned, because it sucks if it goes if you don't, but there's never any guarantees in trading. And here's Richard saying, you know what, looks like selling risk reversals is a good idea right now. It's
a good idea for me. Don't take my advice.
No, and again, we're not giving any investment advice. We're just talking about different strategies we're doing, because there's never going to guarantee a strategy is going to work. But if we're inclined that we're going to go, you want to be positioned so that if it does go, you're going to make some money. And for those people in the new year, this might be a great opportunity to do some diagonals.
Def is actually last question. What expiry? Actually, Def wherever it's cheap. What you tend to find towards I mean, at the moment, the short end of the term structure is always cheap. So 10 delta puts for 3 days, super cheap for what you're getting in terms of protection. Because if there is a crash, you can be sure as hell it's going to be 5-10%, and those puts will go from like 6 basis points or 4 basis points up to like 150 basis points. So you'll do like a 30x on that trade. It's a small chance of it, right? But nice to have a few of those. Buy the puts on the way up, buy the calls on the way down, get that nice long strangle, and then you're covered for 3 days if the market goes ballistic. And also, we also at the moment cover all our positions, don't we? So if we're short any strangles, we cover it with a long strangle.
Yeah, and there's nothing really, buying that short dated protection is really great. It's very inexpensive, but a lot of times we'll stagger it out too. We'll smear it. So we'll buy some short dated, we'll buy some medium, we'll buy a little bit longer. It helps with Vega. Like there's some other benefits to it in terms of your account, which we won't want to get into today. We're out of time, but you know what? Whatever you're comfortable with. For us, we just want to sleep easy at night. Let's say the market goes up 15% tomorrow morning or goes down 15%. We want to not be in a really difficult position. We'll know there's going to be things we have to manage, but we don't want to blow up the account, right? Or we want to make money. Ideally, if something like that happens, and it happens, once a year. So it's going to happen. It's just a matter of when. So let's be prepared for it. All right.
I think it's about every 250 days you get that kind of move. So be mindful of that.
Fantastic. Sorry, guys, we ran way over time, but thank you for spending, what should be 30 minutes, 40 minutes with us. We always appreciate it, and we appreciate these great questions, and we'll see you again next Thursday.